So, okay. Hello, Facebook community. This is Ty Green back to do our webinar with Mrs. Harvey, who's an enrolled agent with her company, Distinct Tax and Notary. So, Alysha, how are you this pre-Thanksgiving?
Hey, Ty, I'm good. I'm good. Just, relaxing a little bit. My birthday's tomorrow, actually.
Oh, really? Wow. Well, happy early birthday to you.
Well, thank you.
Not going to ask woman the age, so I'll just move on. I don't do that. I learned never to do that. Well, anyway, we're back to go into part 2 of audit. We had our first topic on audit back in September, and it was a lot of information that was shared. And, when we was doing the last live stream, I thought about, other topics that we can discuss on this live stream related to both businesses as well as individual taxpayers, because tax season is just around the corner, as you know. So what I want to focus on right now is talking a little bit about small business owners, because a lot of times in my teaching, I come across students who are business owners or former business owners, and they talk a lot about extraordinary versus ordinary expenses, even though they don't know that terminology, because I've studied that before in the past. I kind of have a little idea about that. So, Alysha, would you mind sharing with the audience exactly what extraordinary and ordinary expenses are and how they can be accounted for on the tax return?
Sure. So with your ordinary expenses for a business, those are the things that are necessary in order to be able to operate, such as maybe rent, phone, office supplies, something very simple. But then you have your extraordinary expenses, which are something that's not common, things that do not happen on a regular basis. So you have your instances that happen, such as like a fire or maybe a total loss of a vehicle. So the expenses that you incur in regards to that, those are extraordinary. Or say, for example, something happens to the owner. So now you have to hire maybe a third party. You may have to hire another enrolled agent, another CPA, or maybe another manager of some sort, just to keep up with the business and make sure that it's still flowing. Something like that is considered extraordinary, even though it may be considered ordinary to someone else. But your business is very unique. It's very special. It's not something that we can sit here and say, oh, yeah, that's extraordinary for each business. You could be in the same industry. It could be extraordinary to you and not extraordinary to them. How you operate and how you function is something totally different on your next door neighbor.
So from the standpoint of the IRS, how does the IRS really treat our extraordinary expenses? Because a lot of times, on tax forms, certain things happen that can trigger an audit. So from the standpoint of the IRS and the audits, how does the IRS look at the extraordinary experiences from the standpoint of something that could possibly trigger an audit?
Right. So the way the IRS will look at your extraordinary expenses, depending on the situation, there's a whole nother form we have to complete. So if you have a serious loss of some sort, that's extraordinary. If there's a natural disaster, that's extraordinary. So there are different forms, which of course you're thinking, okay, what does that mean? Does that mean I have to pay more money for my tax return? Does that mean I need to get a CPA or get an enrolled agent? More than likely, yes, you need to go get someone when that situation happens. And of course, as we always say, make sure you have your books in order. But if you try to mask that extraordinary expense within your other expenses. It may not trigger an audit, but if it does, guess what? Now they're going to wonder, okay, why wasn't Form A or Form B completed? And why didn't you break it out by itself? So, having it as a separate line item, just as, when you look at your P&L, when you look at your balance sheet, you have separate line items for a lot of different things. It is okay to have that separate line item for that extraordinary expense. Because if not, it's easier to ask for forgiveness later than to try to mask it and be deceitful, even if that's not your intention. It's always best to come forward with what is going on, and not to try to hide it. Now, of course, we all know if you try to hide things from the IRS at that point, then we might have some problems, because what it looks like to them is just like you get in trouble with your parents. You try to hide it the first time, you're going to make them, they're going to be really pissed. Then just coming straight up and saying, hey, I broke the coffee pot, or, I broke the coffee mug, whatever it may be. It's stuff like that, it's okay to say it up front. But the reason why the IRS separates it from your current P&L that is submitted, it's because it is special. It's something that's not going to happen. It's not going to reoccur. And it technically it shouldn't, unless you are somewhere, say you're like in Florida and you always have hurricanes or whatnot. Even though it may happen on a regular basis, it's still extraordinary because it's not a normal operating expense that you have to go through and you have to incur. But that is why to have that professional, again, or professionals that understand what is needed. It's very important. And a lot of times they're taxed differently, depending on how you're formed as a business. That extraordinary expense could be subjected to gains and losses, or could it just be subjected to a normal expense on the tax return? As a business owner that may not know this, if you try to do the tax return yourself and you get audited for it, it's really hard to try to prove that. There's a lot of different analysis, and sometimes there's valuations that need to be done with some of these extraordinary expenses.
Wow. Now, I know we talked about this before, but I'm compelled to bring it up again because I know in class the other night we were talking about it, and it comes down to meals and entertainment. So, which side of the extraordinary versus ordinary does meals and entertainment fall in?
So meals and entertainment, that is definitely an ordinary expense. So of course, to go back on what we talked about previously, the meals, they're deductible. Even if the meals are in relation to some type of entertainment, as long as the line item specifies it separately. Now, if it's in conjunction as a package, the IRS can deem that entire package was full entertainment, which is non-deductible.
So I know the scenario we was talking about in class last week was, what if I have a business and I want to entertain, well, what I'm about to say is probably not entertaining, but anyway, what if I wanted to entertain my clients by taking them to an Atlanta Hawks game? No offense to Hawks fans, but they're terrible right now. But anyway, what if I wanted to take one of my clients to an Atlanta Hawks game? Now, would that qualify as an ordinary expense because it's business related, or would the IRS pretty much treats that as entertainment, not tax deductible?
So the easy answer is to say it's non-deductible, right? Now, here's where planning your expenses becomes pivotal. You go to the Falcons game. You pay for meals. That is okay. You may pay for a conference room. That is okay. The tickets for that game, the skybox for that game is non-deductible. Now, here's the other thing. Some of my clients may say, oh, that's a loophole there. However you want to call it. You can say that, hey, we're having a meeting at the Ben Stadium and we're having it at the Skybox. Yes and no. Okay. It's a yes or no for that one. But, there comes with some planning. I've had some crazy questions, such as, well, I want to take my employees to a cabin. Well, what are you going to do at the cabin? Are you having meetings? Are you having trainings? Or is this just staff development? What is it? And, if you're trying to entertain clients, we have to be more specific with our expenses in terms of meals and entertainment. Because if it's deemed fun, that is what the IRS code says. If it is deemed fun, it is non-deductible. So you can go to Topgolf, you can go to the Falcons game. All the expenses except for the tickets are deductible.
Wow. Because it was, under the understanding before, and I know I used to think like this too before, I started talking with you about it. But the understanding primarily was you go for a Falcons game, the whole thing is deductible because it's like you're entertaining the client. But I can see what you're saying is that when you purchase the ticket in and of itself is not deductible, but the meals and the skybox and everything else is. So really, it appears to me that somewhere in the system, all right, you have to really, separate what you paid for the ticket versus everything else that's related to, the meals and the skybox.
Right.
Pretty much. So with the meals, like, is there a way that you can, document like everything that you do in this game as it comes down to the meals? Like pretty much how will you have to, separate the meals for the business versus like the entertainment and everything else like that?
Right. So that's where in the bookkeeping and the accounting, your professional bookkeeper, your accountant needs to know how to be able to split those expenses and categorize and code them accordingly. If you're doing it yourself, I guarantee you all those business owners will put it all in one. If your accountant does not ask you questions, if your accountant does not send you an uncategorized expense, if they don't send you questions every month, every quarter saying, hey, I need more information on this, I need documentation on that, then you have a problem because some of your stuff may just be coded the wrong way and you are deducting expenses that are not allowed or allowable.
Right. And I think that's important because, there's a lot of business owners that, hey, get a client, you want to showcase, everything to get this client by taking them to, a Hawks game or a Falcons game or anything as it relates to entertainment. So I think that that's a very important concept to know, that the entertainment is non-deductible, but everything else, the skybox and the meals, are deductible. Correct. Which leads me to ask this: how about adult beverages? Does the IRS
they're always deductible? Yeah, the IRS does not deem alcohol as non-deductible. It's always been deductible, and I'm pretty sure it always will be. What I kind of think of, the people that make the rules, that's Congress. Congress drinks, so, they may not be, your college heavy drinkers, but, they like wine and whatnot. And majority of them have their own business. They're not going to make any law that's going to be detrimental to their business. So if they may not, like I said, they may not admit that they drink. They may not admit that, they like to have celebratory, events.
Right.
But, they happen. So drinks are always deductible. The adult
Right. And
beverages are always.
because I thought because in corporate we go somewhere on a business trip, meals pretty much from a corporate standpoint, anything related to meals, you can, you know, submit a receipt for that, but then you have to separate like adult beverages. But it's good to know that the IRS, with the IRS, all of that is considered deductible.
It
So I
is.
think that's a key topic to know, especially to all of the business owners who is viewing this live or looking at the restream, to know that everything that you do along the lines of meals and entertainment is not deductible. So assume that if you're going and you pay for tickets for the Hawks or for the Falcons, that what you paid for them is treated more as owner's draw or distribution.
Right, exactly. So that's, of course, if you're an LLC, you're a partnership, or an S corporation, yes, we can say it's owner's draw distribution. Let your company be a C corporation. Now we have a different problem.
Okay.
So in C corporations, we don't have distributions that are tax free. Distributions are considered to be dividends, which is where our double tax comes in at.
Right.
So it's very important. Even when you have those meal expenses, it's okay to save that receipt, write who you spoke with and what you were talking about. That is part of your documentation. If you don't have it
Right.
on the receipt, make sure your accountant or bookkeeper is putting that information into your accounting system. Make sure they label all of that, or make sure that you have that receipt saved. One or the other, it needs to be done every single time.
Right. Right. And I'm glad was able to shed light on meals and entertainment, because when I used to do taxes for the small business owner, it's like everything that they did along the lines of meals and entertainment, they always thought that it can be deductible. But
Mhm.
as you and I both know, even the part that is deductible, you're not going to get the whole deduction. It's only, I believe, 50% or 80% of the
50%.
deduction.
Yeah. So it's a 50% deductibility for those meals and entertainment. Now, if you are an overnight truck driver, then it is 80%.
Okay.
Yeah.
Wow. It's a lot of rules and a lot of loopholes. That's why we say this all the time, that you have to have somebody in your
Right.
business who understand these loopholes and book it accordingly. Because
Right. You
when
need
the
someone.
IRS comes, they want answers.
They want
You
answers.
know.
They want documentation. They need support. For example, I had a lady, or I have a lady now, who's out of North Carolina, and she has some tax issues. But the problem is there's no bookkeeping. There's no accounting. Everything's written on a sheet of paper as a summarized number, and those summarized numbers, they're round. And as an accounting professional, you understand what I mean by round. And for the rest of everyone, it's all fives and zeros. What am I supposed to do with that? That I know it's fraudulent. I know it's fraudulent. And it may not have been intended to be fraudulent, but you are estimating, you are rounding, you are guessing,
Right.
which is never good, never good at all. So now she's in a tax bind. But the only thing is, yes, because I am licensed, I need documentation. I'm not
Right.
putting anything on that tax return. Just because you write it on a sheet of paper does not make it right.
Right.
I need the accountability system in place. I need your documentation in place. That support is necessary.
Right.
And it's very unfortunate that so many businesses operate this way and never think anything different until they're caught otherwise.
Right. So, from the standpoint of a client who comes to you with no bookkeeping system in place, and they have these rounded numbers and these estimates. I'm
Right.
just curious to see, what do you say to them? like, like, how do you really relay the fact to them that, I can't do anything with this tax return because basically numbers, I can't prove anything. So do you go
Right.
into, the spill of the importance of the bookkeeping system, or like how do you relay this information? Because it's something that before I came into business, I thought that it was elementary, is something that they should know. But being
Right.
around that, I see that it's not, and it's something that's pushed aside.
It
So
is.
how do you handle that client who comes to you with, no bookkeeping system in place at all?
Right. So that happens more often than you think. When someone comes in the door with the system, I am jumping for joy because I know for a fact someone's looked at this, someone's reviewed it, someone is doing their job. Now, when they walk in the door, I kid you not, my head goes down, my hand goes up like, oh my gosh. It happens every time, and I'll look and I say, oh my goodness. And it's so funny because it's so common. You would think that I wouldn't react that way every time, but I do. And it's because I care. I want to help you become successful. But when they walk in the door and they say, hey, Alysha, or hey, someone, said, hey, you're good, you're this, you're that, whatnot. And then we sit down, I review the documents, and I say, well, where are your financial statements? Do you have something I can fill out? So at that point, I said, well, yes, I do have something you can fill out. Um, so then, we then go to the next point of, well, where are you getting your numbers from? Because they're just sitting there, they're just writing, they're filling it out. Oh, I don't know my EIN. Well, let's get that. So they have to, kind of dig around for that. Then they'll say, well, I don't really know how much I spent on any of this. So then, of course, I then sit back in my seat, and sometimes I cross my arms, and just me being aware of what I do. Sometimes I cross my arms. Sometimes I just sit down and take a deep breath, and that's when I just come out and tell them, hey, as a business owner, if you want to be successful within your business, you have to have an accounting system. If you don't have that accounting system, this is what you get. Now, imagine if I was the IRS.
That's what I was just about to. Yeah, yeah.
Imagine I'm the IRS now, and you're giving me the documents.
Right.
Guess what they're going to do? Do you see this shredder over here? They're putting the papers in that shredder. You owe X amount of dollars to the IRS because none of this is sufficient.
Wow.
So this is important. Now, because I make that statement, because I give those examples, I lose a lot of people that walk out my door. They walk out and they say, well, what can you do? Nothing I can do. You need someone to go through your bank statements. You need to go through your receipts. But that's the thing. A lot of them don't have receipts. They don't even know the bank statements. Some of them may switch banks in the middle of the year and do not have copies of those. That is very important. You have to have all of it. And a lot of tax preparers will tell you, no, I don't need the bank statements, because technically they don't. That is your responsibility. But you do have tax preparers, tax professionals that do care and that do tell you, I need your bank statements. I need your receipts. Do you have them? And if those are the ones that are asking you for that, those are the people you need to stick with.
Right.
But it's very important. You have to have it. And that's usually, my explanation to them when they come into my office, and
Now,
they don't have it.
Right. Have you ever, when you was doing, let's say somebody came to, and you engaged in doing their taxes.
Okay.
Have you ever just went into this total full IRS mindset with them, just to see like if they can really back up anything that they are reporting to you for their tax return? So have you ever just went full IRS on any of your clients right when you was doing their taxes?
Now, and it's interesting you asked that question. It's normally part of my procedure. to
Mm-hmm.
go in that mode. And it seems pretty forceful sometimes.
Right.
But I need, I want I want my potential client to understand the severity of this situation. Um, and I want them to be better business owners because,
Right.
of course, if they are not in business, guess what? We're out of a job at that
Exactly.
point.
Right.
Or, if they just go to as, an ordinary individual with a W-2, not to say we'll be out of a job, but more than likely we're not doing that business return anymore.
Right. And the
So,
reason why I ask that, because I think that is the going full IRS mode with the client. I think that's real good and qualities of a wonderful tax preparer, because a lot
mhm,
of tax professionals don't do that. I'm not going to mention the company, and we saw them last year. Not going to say who it is,
yeah,
but it's like, a lot of times a business owner will come be sold on the idea of, you bring me your receipts, I'll do your tax return. But that's not really benefiting them, because those receipts are really looked at.
right,
Okay, they're not really being, asking the question, well, how does this relate to your business? And that's where a lot of, small business owners kind of get in trouble with taxes, and then they blame it all on their tax professional. But
right,
the tax professional's job is just to prepare the information that you present to them. But I
exactly,
think being in full audit mode like you do only benefits the clients. And like you said, unfortunately, some of them, may walk out, but I'm sure you retain the quality clients who understand that your services is from the standpoint of an IRS, since you are an IRS enrolled agent.
right, exactly. And it's very unfortunate because you see so many business owners where some of them are doing phenomenal. I mean, you
Right.
have people lining up at their doors, but I kid you not, if your favorite restaurant that you went to just automatically just shut down out of nowhere, and you're wondering why, what happened? I can't eat here anymore. And to find out it was something so simple that they could have put away X amount of dollars a year to have these services to stay open for maybe another 20, 30 years. But something that simple they decided not to do because they thought it was too expensive.
Yeah.
And it's either I'm just throwing a number out there. Do you want to pay $20,000 a year for your accounting? Or do you want to go from making millions of dollars down to zero just because you didn't want to spare $20,000?
Right.
It sounds stupid. But you're in business to make money. In order to make money, you got to spend money. It's just the cost of doing business. Unless
Right.
you have some phenomenal person, what's in your circle that you trust that will keep these books up for you, that will go and scan in your receipts because the receipts wear over time. Unless you have that person, you need to find someone you can trust, someone that you feel that you can work with professionally. It's
Right.
not, we all work with people we like. And if we
Right.
don't like them, guess what? You don't work with them.
Absolutely.
So and it's a very tough position to be in sometimes because what I do is not fun to a business owner. Not fun at all. But what could be fun is maybe catching up with me. But knowing the value add that I have for your company. But that's, and the same thing with you, the value add that you have on the bookkeeping and accounting side that they take for granted. But I kid you not, let them want to expand, open up another location, hire some more employees, go and get a loan out for some advertising. Guess what? They need financial statements,
Right.
you know.
Right.
And I'll give you one example. I have a lady out of Florida that just moved up this way. She has a nonprofit and 2 daycares. And guess what? Her accountant, tax professional, he died. So she's been going without filing. She's been going without recording. She's been going out without all of this, but she knows she needs it. So she found me on Instagram and said, "Hey, you seem very knowledgeable. I think I want to work with you. Can we schedule a consultation?" So she comes in, we talk, we chat, get to know her, her business. But guess what? If anyone who doesn't know about nonprofits, if you don't file after about 2 to 3 years, you can lose your nonprofit status. And she filed in 2 years. We're working on year 3 now. So I haven't even started, and I met her about a month and a half ago. But funny thing is, I just spoke with her earlier this week. And it's only Wednesday, so obviously I talked to her on Monday, and I asked her, said, "Hey, what's the status? What are we waiting on?" So, it's things that people need to know, that now she's trying to get this loan so she can move her daycare and add another location here in Atlanta, but she can't do that. Why? No financial statements, no documentation, nothing. So
and
what do you, at what cost?
right. And that's what, pretty much I go through on, my side of things, when I first got into this industry. It's like, talk about everything in business. I used to go to a lot of the, the business networking events, entrepreneurs, and,
Right.
I see business card. I'm sure you experience this too, but I see the business card things. "Oh, what do you do?" "Yeah, I'm a retailer." "Yeah, I fix cars."
Right.
When it comes to the accounting professional, "What do you do?" "Well, I say I'm a QuickBooks specialist." And the first question that I'm always asked is, "Do you do taxes? Because I need somebody to do my tax return that I haven't filed, or either somebody else messed up my taxes.
Right.
Do you do taxes?"
Right.
But what always seems to go over the heads a lot is, okay, when I say QuickBooks specialist, that means that your books can be set up to where, if your books are set up correctly, your taxes are going to be set up, it's going to be done more efficiently. And all of those scanning of receipts that you just mentioned, that's your IRS proof right there. So if you're ever audited, here is the proof of everything that you are reporting. So that, concept always seemed to kind of baffle me. But then I had to learn, as the more I go along, is that, more business owners need to be, schooled and educated on bookkeeping. As I know you don't want to do it, has no interest. It's like watching paint dry, but it's the key to effective taxes. It's the key to being able to go and back up all of those numbers that you report to the IRS.
Right. Exactly.
So I want to ask you this. I know we talked a lot about some of the, the bad things that can happen when the IRS comes and says that your books are out of whack. I'm shredding everything. You owe X, Y, and Z. But what happens when the IRS comes to audit and the IRS sees everything in place and everything is compliant with what you are reporting? How does the IRS handle situations like that? Positive.
So that's an IRS auditor's dream. And as much as people believe how bad the IRS is, you have no clue how many amazing, good auditors there are out there. Yeah, there is a handful of them that are pretty nasty, mean, or whatnot. But if you have all your ducks in a row, the presentation is remarkable. Guess what? Now that auditor is thinking, I guess it's not much work I have to do here. So, think about it when you're going on your first date. You don't show up without, clean clothes, maybe putting on a little cologne and some perfume, and you took a shower, took a bath, or, something. Your presentation has to be there. And for women that, might put on some makeup or whatnot, that's what your financial statements, your tax return, that is the presentation. That is the mask of your business. If that looks bad, the auditor's already thinking, okay, everything else behind it is bad. So I tell people all the time, if we can present this the right way, then guess what? Audits will not be so scary. The audits are going to come one way or the other. The longer you're in business, the more likely you are to get audited. It's just the math. The risk goes up. And if you have everything in order, an audit shouldn't scare you like, oh, okay, nope, I don't have to worry about that. Because I know some of the clients that I have that we do the bookkeeping for, because I don't do the bookkeeping and accounting for all my clients, but for some of them I do. I kid you not, when they get their monthly reports, I mean, you're looking at somewhere close to almost 70 pages. And why? Because that includes the bank statement, the bank recons, the journal ledgers, all the notes and documentation that I have that you provided me. Now, if you didn't provide that with me, it's not included in that packet. But everything is audit ready, and it has a cover sheet with your business name, logo, and who provided this packet for you. And of course, then it has distinct taxes name on there. But you have to have that all in order. It doesn't happen overnight. I do have one client that I'm trying to catch up, and it's a nightmare. But I promise you, once you get it caught up, once you have that bookkeeping in place, and you have your packets together, or I've heard one other bookkeeper here in Atlanta, she called it a booklet, a monthly booklet, your financial booklet. So I've heard packet, I've heard booklet, I've heard statements, I've heard reports, however you want to call it. If you can have all of that in place, running a business is the only thing you have to worry about. Because the last thing you want to have to do is to wake up one morning to find out that you got an audit, that you may have penalties and interest building up, and that, okay, because of this tax bill, we can't even function. Now we have to lay off employees. Now we have to shut down some locations, or we may even have to go bankrupt just to pay taxes. It's not fun. So if you do it right the first time, Amazon didn't get to where they were by having some crappy books, so what makes you think that you can do it? Even if, there's some really great companies out there that may not charge an arm and a leg, but you have to be careful on what you pay for. They can go and, do the books and whatnot, but guess what? You may not have someone that you can talk to, someone that you can correspond with, someone that you can review your books with every month. You got to be able to, you got to be able to know what you're paying for.
Right. And I know inside of QuickBooks Online, and I think, certain versions of QuickBooks, there's audit reports in there, which, pretty much centers around really whenever you are presenting the financial statements, that everything that is presented at month end has been pre-audited pretty much. So you have everything in place. So that is always one of my biggest tasks for our live streams and creating my platform, is to get a lot of the small business to understand the importance of bookkeeping and the role that it plays in tax preparation. Because I've seen so many instances where problems could have been solved if a bookkeeping system was in place and set up correctly.
Exactly. And, you don't want to be that taxpayer or that business owner that, doesn't have their stuff together.
Right.
It's really embarrassing because you can't be with the top hitters. You can't be with, the big bosses and whatnot if you don't have your stuff together, because they're going to ask, who's your accountant? Who do you use? Oh, you don't use anybody? Oh, you need to call this person right here. And you need to call someone. Make sure you ask for their credentials. Make sure you ask them their experience. It's okay. Don't feel embarrassed to ask, but I don't want you to just pick up someone who doesn't have any experience in this whatsoever. You don't want to experience that because it's not fun. Again, it's not fun to know that you paid someone to do it the first time, they did it wrong, and then now you got to pay somebody else the same amount or more. You're gonna be pissed.
Yeah, and I've seen that instance just going in and looking at someone's chart of accounts in QuickBooks. I mean, they had cash categorized as income, cash on the income statement.
You're kidding me.
Undeposited funds all over the place. Balance sheet items on the income statement items on the balance sheet. No bank reconciliation. So, I mean, and the whole attitude was book it anywhere, and the whole purpose that you and I are really trying to convey here is you need to have these things in place. If these things are in place, then when an auditor comes in, you should invite the auditor in. Hey, you want to have a cup of coffee? Hey, here's my stuff. But I'm sure if the auditor sees that it's correct, won't the auditors be like, some auditors may be like, all right, forget this.
And call it a no change audit, and you're good to go. It's an amazing, it's a wonderful feeling to get that letter in the mail or that letter via fax that says audit no change, audit deemed no change. That is the best feeling. Now, granted, yes, you had to pay your tax preparer or your bookkeeper for their hours working on this audit, because I kid you not, audits are not cheap. It's either you're going to pay per hour for it, anywhere from $75 all the way up to maybe about $350 an hour, depending on who that professional is. It can be done as long as everything is put in place. Now, that's the other thing. It's either you're going to pay for it now or you're going to pay for it later. If you had the right professional in place, the audit's not going to take that much time. And when I say that much, the average cost of an audit for a business is anywhere between $10,000 and maybe about $35,000. Now, and that's over time. Some accountants take half up front. Some of them bill by the hour and they get billed every month. Or you might get billed at the end of the project, whichever one it is. I'm not, it depends on which one. But so it's either you pay, for example, going back to that first example I give, you pay $20,000 a year for the bookkeeping and accounting, and then you might pay $5,000 to $10,000 for the audit. That say you don't pay for your accounting and bookkeeping. Now we have to do that original $5,000 to $10,000 plus the $20,000, maybe more, that you didn't do in the first place. But now we're going at least 1, 2, 3 years back. You don't remember what happened. You have no clue what happened. And I'll give you another example. So I have a client out of Baltimore who's going through an audit now. And he's an individual. He's not a business. He once had a business, but that's a whole nother story. There was a business on his tax return, and he said, oh, no, I shut that thing down a couple of years ago. Yeah, we got a problem. Because that's on your tax return. Now you're being audited. And he received it shortly after he filed his tax return. And it's very sad. It's very, it's mind blowing. And for the client, on the client's end, he's pissed. He's like, man, I paid him to do this, or I paid her to do that. And this is what I get. You get what you pay for. And that's one of my questions I ask. Well, how much did you pay for your tax return? About $50. Let's be real. Tax returns cost more than $50. Okay. Yeah. That was the one thing I told him. He said, yeah, I know, but I didn't realize it was a problem until I received the audit notice. And then I looked at the tax return on page 2 to see that it said self-prepared. You get what you pay for. You pay what you get, So, things like that. He just said, I thought they were helping me out. Yeah, he or she helped you out for sure. But now you're stuck. And it's just, I ask those questions. So what do you want me to do? As a tax professional, guess what my responsibility is? My responsibility is to report that individual. So initially, I don't tell my clients, no, I need to report them. I'm not telling you that because I already know what my clients are going to do. No, I don't want to be a snitch. I don't want to do this. I don't want to. Who prepared your tax return? That's part of my interview. I get that up front before I even know the whole situation, because once you come to me, a lot of times, if you weren't with me before, I already know what the problem is. I already know. But I always tell them, I ask them, who prepared it? Where are they located? What's the business name? And then I will Google while they're sitting there and figure out, oh, is it this person at this location? Yeah, that's them. Okay, so what happened? So they're talking, you know, they give me the whole story. Who was the preparer? Let me look. So they'll have emails from that person. What's the email address? I report all the time. Call me a snitch all you want, but one thing I will tell you, I protect my license at all costs. Because what can happen? Because Jane and Joe down the street can prepare your tax return and charge you $50, but let them screw you over. Your thought, your perception of tax preparers, you're going to take it down the drain. And you're going to say, oh, they suck, they're scammers, they're this and that. I don't do that. A lot of the tax professionals I talk to, I deal with, they don't do that. So I prefer to get those people out of the way and stop taking advantage of our tax professionals. Our taxpayers, taking advantage of them and then leaving them high and dry, changing their phone numbers, and they don't know what's going on. You know,
I call it the vaunted self-prepared on a tax return.
Mm-hmm.
What people have to understand is self-prepared means that you're taking full responsibility for it. And you know, that's, you know, one of the reasons why I got out of doing taxes is just that, trying to do it the right way versus doing it just to get back a certain amount of money just so you can please your client. Because in the long run, the client is the only one that's going to be hurt.
And they are. I know the IRS, they did what I call a sweep late last year of tax professionals who did fraudulent tax returns. And, you know, in terms of like earned income credit, a lot of people lie about that. The biggest fraud that I can think of is when you have a mother and father that's either been married, not married, they got a child. The mother normally claims the child, but then the father decides, well, I'm going to claim him because I feel that I should. And in order to be able to claim a child out of wedlock, you need to go through the courts in order to hash that all out. But what a lot of people will do, I go and claim the child, the father claims the child. Now at this point, somebody's return is being rejected. Now, when someone's return is rejected, guess what happens? We then have a return that has to be paper filed with identity theft forms that are attached. Mm-hmm. So then that causes an investigation on the IRS's side. The mother or the father, one of them is going to get a notice from the IRS that says, hey, all that money you earned with earned income credit, you got to pay it back plus penalties and interest. So that, you know, that $3,000 to maybe $10,000, $12,000 that you received from kids, now you got to pay it back, and that's how people get into tax debt. The other things are people claiming their nieces, their nephews, their cousins, their brothers and sisters, or whoever that are younger than them, just so they can get some money back. It's crazy. Majority of my client base don't have earned income credit. I want to say I might have 20 that have earned income credit. I don't have too many of them. And I do it because there's so much fraud involved with it, which is why, you know, in the last couple of years, the IRS has backed away, or that's probably not the word I want to use. They have delayed their refunds by at least like 3 to 4 weeks. Once you file, you got to wait 20 something to 30 something days. And they do that because they want to do their investigation. Are you due this credit? They need to complete their due diligence and see their records. Now, one thing that the IRS did, they are now in conjunction with the Social Security Administration. So all these government agencies are starting to collab together. And now they're sharing information. Once all of this mass collaboration happens and it's finalized, all this fraud, there will be none. Your tax return won't even be accepted because of it.
Wow.
So people need to be aware of the EIC. They need to be aware of, all of these issues that can come about, especially with the wrong or the bad tax preparer. They'll sit there and say, oh, I have a child you can claim. Oh, you need to run quick. Because whatever child they're saying they're claiming is not a child you need to claim.
Right. And that's
right.
That's what I see all the time when just like I'm gonna claim this child, or
right.
Just somebody say here, you could claim this person. But now it's like when you're saying about being in conjunction with government agencies and everything.
Right.
That's going to eliminate a lot of that. So
it will.
So all this claiming a child, and some instances I had questions. Can I claim my parents? My mother lives with me, and all this other stuff. I'm like, that earned income credit can really get you in a whole lot of trouble.
It will, and it will get you in even more trouble because Congress doubled the earned income credit this year. So instead of it being $1,000 per child, it's $2,000 per child. That's one thing. Then, of course, you have the additional earned income credit that takes people, to the $10,000, $12,000 refunds. And that the earned income credit is based on the child. How old are they? Are they in daycare? Are they X, Y, and Z? Then the additional is based off of your income, because as an individual that's working, if you're below poverty level, the Congress believes that the government should pay you. But honestly, they just need to get up out the bed and find them a decent job. I mean, just to be real. I do agree that when people hit on hard times, we should all, come together and be able to help them. But for the ones that stay down just because, they don't need that. They just stay down because they know the government will take care of them.
Right. And, I've always warned individuals about the earned income credit, because eventually that's going to catch up to you.
It will.
Because a lot of individuals think if the IRS don't see it maybe in year 1, year 2, or even year 3, 4, or 5, that eventually they're going to get away with it. But who's to say they try it year 6 or year 7, then everything,
right,
kind of the sky kind of falls. And isn't it true that if the IRS catches you one year, that they can go back and back and back?
Oh yeah, whenever they detect fraud, there is no timeline. There is no limit as to what they can go back and look at. So, and that's the thing that a lot of people do, because the retention rate in terms of your tax documents should only be about 3 or 4 years.
Right.
But say you're one of those people that has tax fraud and you've been involved in tax evasion. When stuff like that happens and the IRS gets a hold of it, because the IRS, they're just enforcers, just like the police officers. They're enforcers. They can go back to when you first started working, when you received your first W-2. They can go all the way back. So I warn people all the time. You can sit here and tell me, oh, well, I have this, I got that, or I have this deduction, I have this. You can sit here and tell me that all you want. At, excuse me, at the end of the day, you're responsible for what's on this tax return. I can only advise you the best way I know. And if I don't know, trust me, I will find out, because I would not advise you on things I do not know. If I do not know, I will tell you, let me research it. Or if I'm unsure, if I'm not 100% sure, then yes, I'm going to research it. Because what I also know too, once I open my lips and part my lips and say something, they think, oh, it's written in stone. Alysha said X, Y, and Z, so I can deduct it. Oh, no, no, no. So I make sure that, you know, I do my research. But people need to know that not all tax preparers and even some bookkeepers are not in your best interest. They may just put some things in on your financial statements just to make it look like you have a loss. And it's not right. I had one lady that called me, I think it was Tuesday. She owns a hair salon here in Atlanta. She was trying to buy a car from the car salesman that I normally use. And he sends me over clients and whatnot. And he called me and he said, hey, Alysha, you know, this lady, she needs some tax work done, and she needs it done ASAP. I said, ASAP? I said, well, the e-file date already passed. So ASAP. What do you mean ASAP? I said, we can mail the return, which by the time they process it, it'll be 2019. So I speak with the young lady, and the first thing that came out her mouth, hey, Alysha, I heard you were really good. And I said, well, thank you. I appreciate that. And she said, well, we already filed the tax return, but because I showed a loss, I can't get the car I want. So I need to change my tax return to show that there's profit. And I said, you do know what you're asking me, right? And she said, well, yeah, I just, you know, I'm not going to submit it. I just need it to be completed. You do know what you're asking of me, right? And she says, well, that's why I'm waiting on my current tax professional now. But she's not answering the phone. I said, oh, who do you currently use? Again, that's me asking my questions. She said, oh, well, you know, it doesn't matter. I'm just waiting on her to call me back. Well, how much would something like this cost me? I said, it will probably cost you your business. That's what it's going to cost you. And she said, well, what do you mean, my business? I said, any professional, any licensed professional, any certified professional of any sort will not touch this mess. And she said, oh my gosh. She was like, why do you sound so angry? And I said, ma'am, we can't do that. I don't know, you know, what your history has. I don't know what, you know, the type of people that you're used to dealing with. I said, but this is fraudulent activity. This is tax evasion. I could lose my license just preparing that return, where you're talking about, I just want to show profit. So I asked her, I said, well, what if you get audited? She said, oh, I've never been audited. I'll never be audited. Oh, okay. The longer you're in business, the more likely you'll be audited. The longer you're on this earth, you're paying taxes, the likelihood of you possibly being audited. I'm not saying that every person that walks this earth has ever been audited, because that's not true. Every person that walks this earth will not always be audited. Majority of the people here will not be audited. But I like to look at each and every business, small business that comes my way or that I get in contact with. I always believe that they will prosper and that they will flourish in their business. But I need you to think that. I need you to believe that. I need you to act like it, which means you need all the necessary people in place in order to be able to move the way you need to move. So, and sorry, I get really touchy with clients who, you know, they try not to be audited, but they want to scam the system. I get it.
You
Nobody wants to pay taxes. I don't want to pay them, but we got to do it the right way.
know, that's deep. I mean, just to get a car to show a profit,
You
you
don't need a
know,
car at that point.
what I mean, I don't my thinking is always as a business, you want to show profit. Okay. And it shouldn't be like in that situation, I would call that profit at a convenience. Because you get in a car or want you gotta I mean, but it just baffles me because this is the mindset that a lot of people in business have, you know, and they don't want to really hear the truth behind everything. And that's
Right.
why I'm glad that you really enforce these things with your clients because these are things that they need to hear. It's either you, I know you're not going to do it because you're not going to jeopardize your reputation or your license. But to me, it all boils down to the whole cognitive dissonance theory. Either you're going to do it or you're not.
Mm-hmm.
But if you choose not to do it, you already know what the circumstances are going to be. So why even be upset?
Exactly.
Because it all boils down to it's not about the tax professional, but it's about you. It's about your
Right.
business and it's about the way how you maintain it and everything like that. But we can go. Whew, I just thought of other topics that we can talk about just off of what we
There's
talked about today.
hundreds. You
I
know, I
mean,
mean, we could sit here and have a forum or a webinar every day. There's that many topics. You know what I mean?
yeah, and it's so. I just sit here. It's just like so much that you know. I speak to people, when I'm talking about the travel agency or when my business. So many wants to go into business. So many want to make all this money. But I
Mm-hmm.
notice when I say anything about what I do on the other side, that's not an interest. It's like, I'll worry about that later. No, you need to worry about these things now.
Yep.
As you say, and as you do in your business, you need to put all of these in place now. Because just like how I teach my students, I always tell my students that for every dollar that you make, the IRS didn't say that you have to give me $1. If everything is correct, you only have to give me 5 cents because that other 95 may be deductible. But the only way to know that is to report it. And
Right.
I've dealt with a lot of what I call, and this is not no knock to anybody, but I dealt with a lot of hustler small business owners who says I'm not reporting anything to the IRS. So they can go buy equipment. I'm not reporting that. And like I learned, if you don't report it, then don't. But just don't come crying when you have to pay a huge tax bill.
Right.
That's just my
Later for
that's
tax
just my
evasion. Then you
yeah.
have jail time. I mean, the list goes on.
Yeah.
To me, it's not worth it. My peace, my sanity is more important than trying to get a quick refund. It's,
Yeah.
it's so more important than that.
Well, that's what separates you from, and we always say this, the rinky dink tax offices, because their whole thing is
It's a
I
bunch
can
of
give
them.
you a refund. And that's unfortunately with the society that we live in, with world everything else. You hear that R word, it's like they can get the business, and they know that. They know that. Well, anyway, it's going on 6:10, and I know it's the day before Thanksgiving. Any travel plans?
Nope, I am traveling to my mom's house. That's about a 25-minute drive. So that's my traveling. Um,
Yeah,
so that's
I'm actually headed.
it.
Yeah, I'm headed to South Carolina actually, just to visit family. I'm not going all the way to Philadelphia this year, but I am going to South Carolina. So, but that's only like a
That's
maybe
not
3
bad
hour
though.
drive. It's
Yeah.
not that bad. So I can stay up and go get an adult beverage. No, I'm just kidding.
Make it right. Make sure you can deduct it now.
Oh yeah, yeah, yeah. Now that I know, really the meal and entertainment, I'm gonna deduct the QT adult beverage. I'm gonna definitely do that. I really appreciate you sharing that information with me.
Yeah, you're welcome.
Well, anyway, like I said, I thought about many other topics that we can discuss offline because if you are available next month before tax season, it's been a year since it will be a year since we did our first live stream on
Right.
tax preparation. So I definitely want to talk about that probably sometime next month before you get busy with tax season, because I want to kind of give everyone a pre-tax checklist of certain things that they should be preparing for tax season for
Oh
both
yeah.
small businesses and individuals. So if you are able to, do that live stream maybe right before Christmas, like we did last year, that'll definitely be great.
Yeah, we can definitely do that. I do have more people in the office this year. Well, I guess coming for the new tax season, so I'll have a little bit more time,
Okay.
so we can continue our monthlies for sure.
Yeah, because we need to reach this audience, because things that that you say in these live streams could be prevented. I mean, a lot of these problems that businesses or even individuals face with
Yep,
the IRS stuff that could have been prevented.
exactly, exactly.
That's just how I see it. Well, anyway, you have a happy holiday. I know tomorrow is just going to be football. Hopefully the Cowboys lose, because that's my nemesis. Sorry, but the Cowboys I can't stand. Hopefully the Falcons win, and I'm looking forward to the holiday and spending it with some family.
Sounds good to me.
Okay, so you take care. Have a wonderful Thanksgiving, and we'll definitely pick this up next month.
Sounds good. You have a good one too.
Okay, take care.